Hello, hello. This is Andrew Berman from NMP, and thank you for joining us for a deal desk. We're super excited to bring you today a focus on bank statements. We brought Angel Oak, who's going to be joining us in a few minutes here, or in a minute. I'm just going to show you my screen, so you should see my screen. Hold on for a second. But you will see my screen as soon as I update my security preferences. Geez, you'd think actually I would learn to do this now. All right. And all right, everyone, thank you for joining us. We appreciate everyone that has joined us. We're just gonna, I'm going to introduce our speaker. Dennis, you with us?
I am here, Andrew. I am here, my friend.
Fantastic. So listen, I am going to, so you are on here. I'm going to reset my settings for some reason. GoToWebinar is not allowing me to show my desktop. So hold on for a second. I'm going to make myself the presenter here. And I am here. All right. Sharing. Okay. Can you see my screen right now?
Got it, baby.
Okay, there we go. Fantastic. Oh, we are in business. Okay. All right. Sorry about that, guys. You think actually after we do, I think we're up to somewhere in 50s for the number of webinars that we've done this year so far, and we've done a lot actually of webinars with Angel Oak, specifically a lot about non-QM. Angel Oak, as you know, is like they're almost like the Kleenex or the Xerox when it comes to non-QM. I mean, they're the largest player in the marketplace. These guys are the leader. They have some amazing products, amazing technology. When we wanted to do a focus on bank statements, we went to Angel Oak. With us today, we have a legendary man in the alternative lending space. We have none other than Mr. Dennis Colon.
Andrew, you think I was paying you for that, but I appreciate it, my friend. I do appreciate it. And did you compare us to Kleenex?
All right, so listen, what I love about you, and you're actually energy. So listen, you've been doing this for about 2 decades, and so in our pre-interview, we had our dress rehearsal. You said actually that no one could stump you. So I put out the challenge and I said, well, you know something? I'm going to see actually if we could stump you. So if you have any questions on bank statement programs, and we did get a couple of actually questions that did get submitted in advance, and we're going to go through those questions. But I want Dennis to be stumped. And if we could stump Dennis, he's going to give one of these fancy Angel Oak mortgage solution jackets. So they've just actually been freshly made. They're actually being given to like some of the top producers over at Angel Oak. But if you can stump them, if you can come up with an underwriting question that Dennis can't answer, you get a jacket. So use that question box on the right-hand side to answer your questions, to ask your questions, and Dennis will answer them. And hopefully someone will be winning a jacket or maybe 2 jackets. I mean, frankly, I'm going to try to think of one myself. But listen, if you want, before we get started here and go into some of the questions, Dennis, would you mind talking to us a little bit about, who is Angel Oak?
Yeah, sure. I'll give you a quick overview. And someone did name it Stump the Chump, so I did take a little offense to that. So now it's going to get personal. So I take on the challenge and start naming
yes, I love
Chump. Maybe someone knows me, maybe you don't, but either way. So I look forward. A little quick. I'm thinking on my bio that we skipped past really quick. If you noticed, it did say I was in the business 18 years. I do just want to mention one thing. Not only that, it's actually more like 20 years now, and I only bring this up because I'm kind of proud. I'm proud of this. I've been associated with this company only my entire career. So I'm with the Angel Oak company since 1999. So I do know this company inside and out. Probably why I'm doing this webinar today, discussing our product. But very proud, and it's pretty unique to have someone who's been with one company their entire career. So I may have the blinders on what we do, but I believe a lot of passion and proud of the company and what we do, what we stand for in the industry. So I just want to give you a little update on that's who I am and how long I've been associated with this company. And that's it. Moving. We'll go back now and I'll give you a little overview on the company. Just wanted to point that out, Andrew.
Yeah, no, I appreciate it, man. All right, let's gonna bring this out. Hope you don't mind. I'm gonna advance go to actually so you can see the whole thing and you can go through the whole overview about who Angel Oak is.
Yeah, and I'll try to keep this kind of quick here. I mean, you guys can all read the boxes. So on the real short version, Angel Oak, we were the pioneer in non-QM. We were essentially the company who brought back non-QM to the industry. And just a real quick recap on that. That's whenever all the crash occurred and all these loans, the Goldmans, you name it, they had billions and some still do have the billions of loans on their books that were worth nothing. That's whenever our owner got creative and went out and opened a hedge fund and started buying these worthless loans at cents on the dollar. Because as bad as the industry made these subprime loans out to be, there were a lot of them, millions and billions, that were performing. So that's really the start of our company, the hedge fund, Angel Oak Capital. Okay, so when you see vertically integrated, I'm going to explain to you what that means and why it's important to you. We started as a hedge fund, okay, with all non-QM subprime loans that were considered non-performing loans, which all performed and had fantastic margins. From there, we opened up Angel Oak Mortgage Solutions. Now, you see the term vertically integrated, and what does that mean? It means we're self-sufficient. We answer to no one. We were the pioneer company. We wrote our own guidelines. All our underwriters technically work for the fund, okay? And there's a dramatic difference in what that means to you versus some of your competitors. That being said, how does that affect you? Well, if you've done a loan in the past or if you've heard some stories, being self-sufficient, meaning our underwriters underwrite our loans and they work for the fund, there is no issue. When they come out of underwriting, they are underwritten by our underwriter. They are signed off on by our underwriter. Then they go directly to the fund. There is no second signature. There's no one looking over their shoulder. There's no third-party authorization. Our underwriters are fully authorized to sign off on that loan and get the execution of the sale to the fund and then to the securitization. Self-sufficient. Now, our competitors, what the difference is, most of them are third-party, meaning they're selling to an end investor. And a key word you're going to hear me bring up over and over again is reputation, your reputation. This affects your reputation because if a loan goes bad, regardless of whose fault it is, you're the one who's facing the agent and the borrower. Okay, so and this happens if you're on the line and you've done a loan, you probably are aware of this, or at least you've heard it. Last minute before you're getting ready, waiting for your clear to close, and you'll get a call from your lender. Hey, by the way, we can't close this loan at 85. We have to drop it to 80. By the way, we can't give you this value on the appraisal. They didn't like it. We're going to drop it to this. There's a number of things happening. And I'm not pointing out bad things. I'm just pointing out real situations that do happen because they cannot close a loan that they cannot sell. So the end all be all is it's going to affect you and your reputation. So that being said, I point this out to you so you know when you're choosing a non-QM lender, it's essential that you look, who are you working with? Are you working with a pass-through? Not that they're not good pass-throughs, but there's got to be a safety net. When you get a loan approval from Angel Oak and it comes out, if it comes out of underwriting with an issue, at least you know that day. But once you have your underwriting approval, that's your underwriting approval until the day it closes, and nothing will change. So that's what being vertically integrated really means to you. It's a safety net for your reputation that nothing will change because it's our money. We fund it, we securitize it, we service it. It's our loan. Okay. I'm gonna leave the common sense approach to underwriting, the local rep, because I'm sure when I get into some of the discussions about products, I'm gonna explain to you how that also transcends into that. Now, one other thing about service and customer service that I do want to mention before we start getting into the questions, another issue that protects your reputation, which is a distinct difference in what we do versus our competitors. Okay, whenever you send a pre-qual to any lender that does non-QM bank statements, they get it. The AEs generally look at your bank statements and they determine your income and they send you back the pre-qual. Okay, let me make something really clear here. These borrowers generally are fantastic borrowers. These aren't your 580, 610 credit score borrowers. These are your 720, 740, fantastic borrowers who have never missed a payment in their life. The only issue they're coming for a non-QM loan is because they write everything off on their taxes. That being said, the most critical issue in getting your loan approved is a correct income calculation. So what we have done, okay, because we were like everybody else, you know, a year ago, the AEs looked at your income, and I promise you, AEs really, truly are not qualified to be doing this. So about a year ago, in order to add a different system of checks and balances to make sure we protected your reputation, was we hired a fully 100% dedicated underwriting team that at the pre-qual stage, whether the loan comes to us or not after the pre-qual, we underwrite, an underwriter underwrites your bank statement income at the pre-qual stage. So when you get a pre-qual back from your account executive, it is a gold stamp that is the income you will get when you submit your file. I just want to stress how important that is, because that is where all these files go dramatically wrong, or it's smooth sailing. So that is a distinct difference in what Angelo does. And there's a huge cost factor, because remember, this isn't loans that are coming in to underwriting. These are loans, these are pre-quals. And, you know, we get 35% of our pre-quals turns into loans. So imagine how many loans we're doing this on, even though the loan may not come together. But that's the dedication we have made to providing you the most accurate income calculation that's guaranteed whenever you submit your loan. So, you know, I'm sorry if I spent a little too much time there, but that's a very distinct difference, and it protects your reputation. And I'm really proud about us developing that program. And there's more technology on the way that's even going to enhance that, but it still sets us apart from everybody else in the business. So there's my pitch on who we are, what we do, where we came from, and how we protect your reputation. And in return, we have a good one ourselves. So thank you, Andrew, for the introduction, and I'm ready when you are.
All right, and that concludes today's I'm just joking. So listen, we already got some questions coming in. Before we go to the questions that have just came in, there have been a bunch of people that submitted questions when they registered. So we're going to go into those first. Okay, let's see. Here we go. Okay, here we go. Question number one. Let me move this so I can see the whole question. Okay, scenario number one. Stump the chump. One borrower with mixed income on statements, some W-2 and some self-employed income. Can these statements come from business and personal accounts? Is time self-employed required?
Okay, a bunch of stuff going on here. First of all, is self-employed time required? Yes, you need to be self-employed 2 years for any one of our bank statement programs. When you get into W-2 income versus self-employed, know that all of our borrowers for these programs must be self-employed. But here's a critical point. If you own a company as a self-employed borrower and you own a company, you may W-2 yourself. You may W-2 yourself a $120,000 a year, so you have a set deposit coming in that shows as a W-2 deposit. In that case, that W-2 deposit is absolutely fine to count in your income calculation. So you may have over and above, you know, a $25,000 deposit from your company on top of your $10,000 W-2 as the owner. That is absolutely 100% okay. Now, if you have a different job on the side, and you don't see that very often, and it's a W-2 job, no, you cannot combine W-2 with a self-employed borrower, okay? This program does not qualify for a W-2 borrower. You need to be self-employed, so you would not be able to count that. One other take on this, if you have a spouse who has W-2 income that is going into the bank statements that we're using, okay, and not our primary borrower, what we would do in that case, you back out the W-2 income for the spouse, and you get W-2 pay stubs and tax returns for that spouse, which is even better, because in that instance, you can give them the gross amount of their income versus the net that you'd be getting in the deposit on the statement that we're using to calculate for our borrower self-employed income. So there's a lot going on there with that question. I hope I made it somewhat clear. At the end, you're going to have my phone number and my email at the end. So by all means, any one of you can, if you want further clarification, feel free to email me afterwards.
Fantastic. All right. Oh, sorry about that. All right. Next question. We've got, how do you come up with expense ratio? Do you look at gross or net deposits?
Gross net deposits. That's hard to understand. We look at deposits. Yeah, it's hard for me to say if they're gross or net, or maybe I just don't understand the meaning there. But when it comes to what expense ratio we use. We default to a standard of 50. Okay, you'll never get less than 50. Now, on a personal bank statement loan, we allow you up to 100% of deposits if you own a business, meaning you're not a 1099 employee. You actually own a business, but you're using your personal bank statements to qualify. But you can show me that you do own a business that you're transferring income in from. We'll give you 100% of those deposits. We also have another option. If you're a 1099 employee and you have no employees, you're just a subcontractor for Cox Communications. Okay, we got a VOE from Cox saying you're a 1099 subcontractor. In that instance, we would give you a 15% expense ratio, meaning up to 85% of your deposits. If you have nothing and you qualify off of 50 and want to make it easy, you will give you a 50% expense ratio. And if you qualify off of 50% of your deposits, that's fine. Okay, so there's personal. Business, we give you a standard 50% of your deposits, and we will allow you 65% of your deposits, equaling a 35 expense ratio, again, with a letter from a CPA stating that. So that's how we, we kind of let you come up with your expense ratios based on the CPA and the job that your borrower does. Okay, and again, the gross versus net deposits, yeah, I don't know how you decipher what it is, but we do give you the whole deposit if that's what you're asking.
Got it. All right. It doesn't sound like this stumped you there. All right. You got to come up with some better ones here. All right. Next question. Here we go. All right. And the scenario is, what are underwriting parameters, LTV, DTI, and FICO requirements?
Okay. That's a no-brainer. That's a pretty simple one. Our programs, bank statement loans, they start at 600. Okay. Obviously, the higher the credit score, the better the rate. 80% is an LTV at 600. To get 90, achieve a 90% LTV, we need a 660. We start doing investment properties, second homes at 640. Cash out requirements, credit score start at 620. So DTIs are going to be 43 front and a 50 back. So again, I think I pretty much I hit it all. So 90% is going to be the highest LTV. DTI, the highest is going to be 43 front, 50 back. FICOs are going to start as low as 600, and obviously, whether it's a primary, second home investment property or cash out, the LTVs will differ slightly depending on that scenario.
Fantastic. All right, here's a real scenario that someone submitted. 90% LTV, 550,000 loan amount, 699 FICO, Maryland primary residence purchase, single family detached, first time home buyer, 24 months business bank statements.
I guess two questions. Number one, want to make sure the borrower is self-employed 2 years. Second question would be, does he have a rental history? We pretty much require a rental history on all our programs for that. And then my third question would be, how soon you want to close it? That's a slam dunk. Yes, get it in. Let's close.
Perfect. All right. Oops, I just missed one over there. Hold on. Let's go back here. All right. Here we go. And this is what's the guideline tolerance for non-sufficient funds while reviewing borrowers' bank statements?
Okay. Well, we do have we do offer two programs in terms of bank statements. We offer a 12 and 24. And a quick history, if you looked at how these started out about 2 years ago, the trend was we started at 24, they went to 12. Some lenders got extremely aggressive, went to 6. I heard 3. And I'm sure I even heard of a 1 month bank statement loan. The trend has been to go the other way now, due to risk factors, and now we're seeing the performance of these loans. So now you're seeing more lenders who want to do the 12 and 24. So we offer 12 and 24. When we look at those, we allow up to 6 NSFs in 12. We offer up to 12 NSFs over 24. However, this is where common sense, back if you look at the first page, common sense underwriting. If you're looking at a 90% LTV and you have 6 and 12 and then 6 and through months 13 through 24, you qualify for 90% LTV. If you have 18, okay, now common sense. Can we do the loan? Can we do it at, maybe we offer it at an 80% LTV? We look at the NSFs. Out of the 18, we're 16 in 1 month because some vendor gave him a $20,000 check that bounced, so it caused him to have 16 NSFs. Right? So in that case, we may not ding the borrower completely, because you can see that this is it's a single event that really occurred. And we know NSFs are due to the vendor's checks not clearing, okay? But we look at it as still it's the responsibility of our borrower to make sure the funds clear before they spend it. However, we do take a common sense approach. You may not always get max LTVs, but we can definitely entertain loans with higher than the 6 or 12 at lower LTVs for sure. And then we start to look at patterns. Was it a 1 month, one-off situation? And that's where we have a tendency to get a little more aggressive.
That's great. Listen, I mean, what it comes down to is like the answer to all these questions is, does it make sense? You know, it's the thing I love about this. When you're dealing with non-QM, when dealing with Angel Oak, if it just has common sense to make a good decision, if the person is able to pay and they've shown the ability to repay, regardless of actually what the tax returns show, they're a business owner. They decide actually, you know, every month, are they going to put more money back into their business? They're going to take money out of their business. It makes sense. So that's what I love about these loans. So next question: why do they ask for profit and loss? Don't you base income off of the bank statement program?
That's a great question. We don't ask for a profit and loss. So I agree.
All right, there you go.
And you said something. You said a key word back there. You brought up tax returns. Do me a favor, whether this is a broker or a processor listening in, there's no difference in terms of how important this is. When you're doing a bank statement loan, please, because I see it every day on quality brokers who have even closed numerous loans with us. When they hand the loan off to their processor, they may have originally looked at it, you know, to go conforming or full doc, and they leave tax returns in the file. The processor may not know exactly what you're doing, and these loans get submitted with tax returns. I want everybody to understand that's a deal killer. It's a deal killer among just about every lender out there that I know of. If you submit a loan, again, we're not looking at tax returns, and they're going to be dramatically less. If that happens, you have a dead deal. So if there's a couple key factors to take away from this webinar, please make sure, as soon as you know this is a bank statement loan, get those tax returns and shred them. Make sure that just get them nowhere close to this file, because accident or no accident, submitted, we got a dead deal, my friend, and there's nothing I can do about it.
Yeah, understandable. All right, so next question. Can you approve a borrower whose income changed from W-2 hourly to commission only with less than 2 years commission?
Well, that's a double no. Number two, no, you have to have 2 years, and the second no would be you cannot be commission. Like I'm a commission employee, but I don't qualify because I'm in W-2 sales commission, so I wouldn't qualify for my own bank statement loan. You must be self-employed or 1099. So, and even if you did go from W-2 to 1099, that's still technically you would not qualify. So you do need to be self-employed 2 years, or 1099 2 years to qualify for these programs.
Got it. Fantastic. All right. Next question here. All right. Owner occupied, non-owner occupied. So talk to a little bit about occupancy requirements or restrictions.
I mean, yes, and you forgot second homes. So, I mean, that's pretty simple. Of course, we do owner occ. Yes, we do non-owner occ. And I'll even take you in a little different direction. We offer another program, not to get off topic here, but when you get into non-owner occ, listen, when bank statement loans are done correctly, they're a very simple loan. And I'm going to get into a word here. I'm going to talk about over communicating at some point here. But if you have the chance, this gets in ready. I'm going to tie back into the customer service. We have local representation, right? You saw that. We have, I believe, about 110 AEs right now in about 40 states. And the states that we're not in, we have inside sales that helps out in those states. So what they should tell you when they see you doing a non-owner occupied property at certain LTVs, although bank statement loans are easy, we have a no doc loan investment. We have a cash flow, a no debt service loan. That is a no income loan, a blank employment. Okay, so although bank statement loans can be easy when done right, you don't have to be a rocket scientist to know that I'd rather submit nothing and go no income for an investment loan than go bank statement loan. And at certain LTVs, I believe it's 70%, the rates start to go toe to toe, and even lower LTVs, your rates get even better on our no doc investment loans. So yes, we have bank statement loans for owner-occupied, non-owner-occupied, and second homes, but that's where a local representation, and Angel Oak has more AEs than any other company in the streets. That's where local representation will help you, because when they see that scenario, they're gonna look to price it with you both ways and give you both options. And I can assure you, 9 times out of 10, if the rate's the same, you're probably going to want to take our debt service loan, or it's even a no ratio loan whatsoever at certain LTVs. So that's yes to all three of those. The one I added, second home, and local reps come into play on that one big time.
Fantastic. All right, let's see. Next question. We have, my client owns a construction company and needs a line of credit.
Okay. Well, we don't do lines of credit alone, but I would ask you this. I mean, most lines of credit are not really gonna, I don't believe they're that's a full doc type product done by a bank, if I'm not mistaken. I'm a non-QM subprime guy my whole life, so I could be wrong on that, but general knowledge, I believe equity lines and lines of credit are a full doc loan. So remember, we do an 85 cash out on a bank statement loan, so we do an 80% cash out on a second home or investment property. So, you may still have the ability to pull money out of your property at a fantastic rate. I mean, if an equity line is going to require a pretty good score. I'm looking at a 740 score, 80% cash out refi right now, and you're at 4 7/8. So I don't know how much better you'd be on an equity line. I don't think they're that much better. They may be an IO, but I have an IO option also. So you may still want to look at a cash out on a primary or second home or investment property to get that money if it's needed. But a standalone line of credit, no, that we do not offer that product.
Got it. All right, fantastic. All right, so this is our last of our pre-submitted questions when people registered. Then we're going to go to the live questions. We got a few that queued up. So if anyone has questions that they want to ask, if they want to stump the chump, we can try to actually throw something at Dennis that he's not going to be able to answer. And if you throw something at Dennis that he can't answer, you get an Angel Oak jacket. So this last one, what deposits can I subtract from bank statements?
Andrew, man, you say that stump the chump one more time with a smile on your face. I'm telling you, I'm flying to New York. Okay. All right. Deposit. This answer really may be easier to say, what can I add? Because it's hard for me to sit here and tell you what do you subtract. I mean, it's really pretty simple. You subtract anything that's not a business deposit. I mean, and this is where a key word I'm gonna bring into play right now is you need to over communicate. The worst thing you can do is get a set of bank statements, not look at them, and just upload them into the account executive's pre-qual and expect him to look at them and not know anything. You really do need to take the initiative and the first step to talk to your borrower and understand what those deposits are. I'll give you a couple examples of what doesn't work. IRS season's right around the corner. You get an IRS refund for $15,000. You obviously cannot count that as not income. You sold a car, a boat, a motorcycle. That's not income. You can't count that. You're in real estate. Okay, you're in real estate and you're a real estate agent and you buy and sell properties. I mean, that's your job. But you found a great deal and you flipped a property and you made $40,000 on a flip. We may not consider that because that's really not your source of income. So, we want to use your consistent income deposits. And I thought we were gonna get into 1099 versus self-employed deposits, but maybe that's a question to come. I don't know why I know I had that as a topic I wanted to talk about. So if I don't see a question, I'll bring it up myself. But again, true income deposits, true income transfers. If you have personal statements and you're transferring in a business deposit, you count that. So this question is really, you can take it two ways. You're going to give your borrower true income deposits on a business bank statement loan. It's pretty simple. I mean, almost all your deposits are going to be business related. Personal can get a little bit convoluted because it's their personal accounts. There's going to be a lot of other stuff going on in there. But just know that you're going to back out what's not what's not a true business deposit. And really that has to start with your communication to the borrower. And if you're unsure about it, I always say this, get the truth. And, you know, there's some terms out there, buyers are liars, and we've heard it all, but, you know, try to stress the importance of it, because the only thing they're going to do is put themselves in a difficult position when we get that loan and the underwriter looks at it and looks at their job in the 1003 and what they do. And if they can't tie that, and then they ask you somehow show you that you can tie it together and they can't, you know, you could be putting a lot of effort into a loan that's not going to go anywhere, because, you know, they're trying to get away with an extra deposit that really isn't. So, you know, I stressed honesty, truth, and over communicate as much as you can throughout the whole process on these loans. It'll make it much more of a smooth transaction as a whole.
Got it. All right, fantastic. All right, we're going to go to the next one, and so we are. You know, I know we always try to do our deal desks at till 2:30, but we got a couple actually of questions that came in, so I want to address these. So we've got. From Mike, if a self-employed borrower spouse is W-2 and income is eligible and verified with direct deposit, is there a minimum percentage amount that the bank statement income has to be monthly of the gross monthly income?
Wow, I wish that one was in writing. If the spouse.
So yeah, I'll read it again. Yeah, so if self-employed borrower's spouse is W-2 and income is eligible and verified with direct deposit, is there a minimum percentage amount that the bank statement income has to be monthly of the gross monthly income?
No. So, okay. First of all, we would back it out. As I discussed earlier, we would back it out. Okay. So I guess maybe the question is that you're asking, do they need to be the primary wage earner? Maybe that could be the question. So no, your self-employed borrower does not need to be the primary wage earner. The W-2 borrower could be the primary wage earner. So that does not matter as long as they both qualify for the program. We're going to go off of the lower of the two scores. But again, in that case, you would back out the W-2 income. You would set it up for that borrower on, you know, whether they're the spouse or the primary, and you'd give them their gross amount with W-2s, pay stubs, and tax returns. The other borrower, we would use the bank statement income to calculate. And again, at that point, we go off the primary wage earner. We would take the lower. We would take the lower of the two scores. I'm sorry on that in that particular scenario. Okay, but okay. I hope I answered that one. Yes.
Yep, and actually, so here's a follow up on that. Bank statement income must be a minimum of 30% of total monthly income. I guess he's asking that. That's a follow up. The same gentleman who asked that. Question.
Yes. Let's put it this way. If this goes into common sense. Let's say you have a borrower who does. If you have two borrowers, no. If you have one borrower and he's just a self-employed borrower, and you have a pension and a Social Security, and your pension is $3,000 a month, and your Social Security is $1,500 a month, so you have $4,500 of that, and then he has a small little business, and that he's has $2,500 coming in a month from a self-employed business for a total of $7,000. Roughly 35% of your total income would be self-employed bank statement income. Yes, that would be an issue, because we essentially at that point would be giving I don't want to say stated income, but a bank statement loan where we really have verified income. You see what I mean? So that loan would potentially have an issue. Yes. So yes, you definitely need more than 30% of your income to be derived from your self-employment positions.
Fantastic. All right. So we're going to go into 3 more questions, and then we'll get everyone off here. And listen, everyone, and I know we try to do these under a half hour. If you got to run, you got to run. That's okay. You'll get a copy of this, but we can stick around. We got a couple of good questions we're going to wrap this up with. So can we talk about charge-off judgments and late payments? Are there ever exceptions made to the guidelines? I mean, I think this is just so important because there's so many boomerang buyers that are using this program. Talk a little bit about that.
Judgments, no. Tax liens judgments always need to be addressed. Student loans, child support, tax liens, those always need to be addressed regardless at any LTV. But we do have different charge-off policies for better rates. We look for stuff over 4 years, but under 4 years, I mean, as anything, we have like a 0 to 2 years, 2 years to 4, and then over 4. Okay. Anything in the last 2 years, we would have to look at. We leave you, first of all, we give you an amount of $2,000 to be left open. So if you have a Verizon for 500 and a Cap One credit card for 1,000, you're okay. We leave them alone. Let's say you have a car repossession for 5,000. Okay. In that case, we would either look for two things. Do you have reserves large enough to cover the amount of that charge off? If you do, we leave it open. Or could we take 5% of that balance and include it in the DTI? And if we can, and you still DTI, then we leave it open. Over 2 years, we don't care. They can stay open. And then over 4 years old, you even get a better rate. So I hope I answered that. So anything in the last 2 years, you're going to have reserves to cover a portion of it to counting in your DTI, or it would have to be paid if you don't have either one of those. Okay, but we do give you a $2,000 threshold for anything little, not to worry about.
Fantastic. All right. Is there a fix and flip program?
No, unfortunately there is not. No, we do not have that.
All right.
No options either. I got no options on that one either. That's just a straight up no. I apologize.
Okay, no problem. Next one, scenario. Florida investor, condo, 1 million, 1 million loan amount, 700,000. So purchase price $1 million, loan amount 700,000. Single purpose LLC. CS, both principals, credit scores, both principals over 680.
Okay. I'm assuming you want to keep it in the LLC. That's what I'm assuming.
I'm gonna assume that there too. There.
Bringing up an LLC, I gotta assume they're gonna want to keep it in the LLC. We can close in an LLC, but it must be an investment property. And based on everything you said, as long as the score is over 640, you're fine. Anybody on the LLC needs to be on the loan with a max of 2. So that sounded like a scenario that sound like a no-brainer. What I always suggest when you talk about condos, I always suggest to my A's get the condo questionnaire up front. I know it costs $95, $125. I lived in Florida 25 years, so I get it. But the worst thing you can do is go through the whole file, think you have a great file, submit the condo questionnaire at the end, and then you see that you have a one entity that has 37% of the condos, and you got a non-warrantable condo you weren't aware of, and it's a dead deal, and there's a lot of work put into it. So my advice on the condo is always get that condo questionnaire first, and we will actually look at it and approve the condo questionnaire prior to you at the pre-qual stage for you. So again, now you know your income is perfect, and now you know your condo is going to be approved. So we do some things. We're very proactive up front at the pre-qual stage to know you're submitting a file that's going to close. So hopefully I answered that question correctly for you.
And so your assumptions are correct on that. She responded. She wants to know what's a rate range on that.
Oh God! What was the score again?
6. Hold on. What did she say? I believe 680. Let's look and see. 680. By the way, short answer is go to quick quote angeloakms.com. Because right, you can pull up the rates, you can price all these scenarios. A lot of actually of the questions that you answered can be done right here. But 680 score.
Yeah, you're going to be in the low 5s, just depending on a couple of their features here, but probably worst case 5.25 at that LTV. But again, we do have something. Andrew, thank you. I can't believe I didn't bring it up here. I can't believe you beat me to the punch on that one. You may deserve a jacket for that alone.
But there it is, Margaret. You get a jacket.
So we do have a fantastic tool. If you're not aware of it, if you go to angeloakms.com, right on the home page, you'll see something that's quick qual. I promise you, if you give it 30 seconds and use it one time, we've never had a broker use this and say, not so good. In fact, we hear the complete opposite. I wish everybody had something like this. You got to remember, it's 2019, borderline 2020. Technology is where it's going. You put in your scenario, it asks you, I believe, about 8 questions. You type in your scenario, and it's going to give you a range. So if you're approved with us, it'll give you a lender paid rate. If not, it'll give you a borrower paid rate. And from that point on, you can discuss the rest of the scenario with your account executive in that local area. But yes, QuickQuote is an incredible tool, and once a broker uses it once, they use it all the time. It's a fantastic tool. A lot of compliments on that one.
Fantastic. Awesome. All right. Listen, I think that's, I think we're going to wrap it up. I think you answered a lot. We got a lot of the questions that we want. There were, there's definitely a couple of people people have some scenarios that they're going to submit to the QuickQuote. We've got a handful of people say that they're sending a deal in the next few hours. So people actually already thinking about where they're going to be able to use the bank statements program. Dennis, it's been a pleasure. I really actually appreciate you putting the time aside, helping our readers understand how awesome the bank statement program is, and we love doing business with you guys.
Hey guys, it was a pleasure. If you're working with Angel Oak, we do appreciate your business. If you haven't yet, anything I can help do to get you up and running. Our approval process is running approximately 48 to 72 hours. Love to bring you on as a new contact. If you shoot me an email and your location, the city you're in, maybe the state would help. I'll get you in touch with the local regional manager and get you an AA assigned here within. I'll be flying today, so worst case, it may be tomorrow morning. I'll do my best to get it done in the next hour, but I have to catch a flight. But I promise you, worst case scenario, late tonight or tomorrow morning, you will be contacted by an AE. And again, from Angel Oak to all our customer base out there, I hope you had a great Thanksgiving and happy holidays. And again, thank you for your business and your support.
Fantastic. Awesome. All right. I appreciate everyone. Thank you so much for joining us for another Deal Desk from your friends over here at NMP and, of course, our friends over at Angel Oak Mortgage Solutions. Really appreciate it. Everyone have a great December. Hope 2019 was awesome for you, and looking forward to doing a lot more of these things, a lot more webinars with you in 2020. And that concludes the Deal Desk for today.
No stumpers, baby. No stumpers. No stumpers.
Yeah, that's right. Well, no, we got Margaret. Margaret gets a jacket. You promised Margaret a jacket.
Margaret, you know what? Margaret, please send Andrew your email address, your contact information. I would like to send you that because you brought up our QuickQuote system, and it is a incredible, valuable tool. So please, I want you to get a jacket for that. So please send him your information. I guarantee that'll be out to you within 48 hours. All right. Thanks again, guys. I had a great time.
Okay, fantastic. All right. Talk to you, Dennis. Take care.